Good morning, ladies and gentlemen, and thank you for standing by. Further to financial year 20 results and announcements lodged on the ASX this morning, welcome to the Primewest Group Limited financial year 2020 results presentation. My name is Gail Campbell, and with me this morning is John Bond, Executive Chairman of Primewest Group, David Schwartz, Managing Director, and David Creasy, Chief Financial Officer and Group Secretary of Primewest Group. For your information, all participants are in a listen-only mode. After the presentation, there will be a question and answer session. Please feel free to type your questions in the Q&A field during the call, and we will address these at the close of the presentation. Please also be advised that this session is being recorded. I would like to hand the conference over today to your first speaker, Mr. John Bond, Executive Chairman for Primewest Group Limited. Please go ahead.
Thank you, Gail. Good morning, everyone. Thank you for joining. I'm the Executive Chairman of Primewest Group, and together with our Managing Director, David Schwartz, and our Chief Financial Officer, David Creasy, we will take you through Primewest Group's financial 20 results presentation. We'll begin with our group overview, where you will see that we now have $4.5 million of assets under management. This represents growth across all sectors of our portfolio, which includes office, large format retail, industrial, tourism, retail, and agriculture. Financial year 20 has been a very good year, especially with the backdrop of COVID-19, and provides us with a favourable footing for financial year 21. We have delivered strong growth in financial year 20, having increased our assets under management by 19% from June 2019, having made acquisitions of $658 million. This delivered operating earnings per security of 5.5 cents. We've announced a distribution to shareholders of 2.8 cents per security, which equates to a total shareholder return for the year of 8.8%. As at the financial year end, we were in a strong financial position with no debt on the balance sheet and $54 million in cash. Over the last 5 years, we've continued to grow. Assets under management have grown at a compound annual rate of 15.4%. From financial year 19 to financial year 20, we've grown at 19%. As at 30 June 2019, our portfolio was $3.7 million. Our growth in assets includes $308 million in unlisted syndicates, $70 million in a new warehouse wholesale mandate, and we also acquired the rights to the Vital Harvest Freehold Trust, A-REIT, adding a further $280 million to assets under management. During the year, we divested 308 Queen Street in Queensland at $47 million, providing a strong return to syndicate investors. And we're proud to announce that despite COVID-19, our total portfolio has been revalued upwards by $102 million to total assets under management of $4.5 billion, as previously mentioned. In terms of total shareholder return, Primewest Group has delivered 8.8% from IPO in November 19 to 30th of June 2020, outperforming the S&P ASX 300 A-REIT indices by 30.5%. In syndicates, we saw 13% growth, where we launched 7 new funds, equating to $308 million in assets under management during financial year 19, including 5 funds equating to $228 million after the IPO. We launched the Primewest Media Trust at the height of COVID-19 and successfully acquired Lamatina Farm and have a strong pipeline for financial year 21. On mandates, we saw 22% growth, where we established a new Daily Needs Trust, which is an institutional mandate on behalf of a large international investor. Since its establishment, we have purchased a number of neighbourhood daily needs focused assets and have high transaction activity. In the listed REIT space, we acquired the management rights and a co-investment stake in Vital Harvest Freehold Trust in 2020. Its assets are 100% leased to ASX listed Costa Group, Australia's largest horticultural company. This provides us with a great platform for future growth. Some of our recent acquisitions include, from top left of your screens, Primewest Industrial Income Trust number 3, which was established in July 2019 and now comprises 5 quality industrial and logistics assets with a total value of approximately $76 million. Sky Park Office Trust, which was purchased with our US-based partner, Protea Properties, established in August 2019 with a value of $9 million. The trust consists of a 4,000-metre office building in San Diego and California. Primewest Diversified Income Trust number 4, which was established in November 2019, now has a value of $75 million across 3 quality daily needs assets in New South Wales and WA. The trust has a weighted average lease expiry of 9 years, and approximately 60% of its income is underpinned by blue chip tenants Coles and Woolworths. Then we have the Primewest 66 Kings Park Road Trust, an office trust established in November 2009 for $33.1 million. This is a trophy West Perth asset leased to multiple tenants. The Primewest Agricultural Income Trust number 1 was established in February 2020. This trust now has 2 quality agricultural assets in New South Wales and Victoria and is valued at $48 million. And finally, the Primewest Media Trust, which was established in March 2020 with a single acquisition of $75 million. The trust was a counter-cyclical office warehouse acquisition on a 15-year triple net sale and leaseback to 7 West Media, with the replacement value of the assets well in excess of the purchase price. Primewest currently has 2 active mandates across office and convenience retail, with assets under management of more than $700 million, both of which have further committed capital to invest. The office mandate covers Perth and Brisbane and currently includes 2 premium A-grade properties in Perth CBD, Exchange Tower and the Quadrant. It's a testament to our leasing and asset management teams that both assets are tracking at less than 2% vacancy in a challenging market. In early 2020, we successfully secured a new $300 million daily needs mandate from an offshore sovereign wealth fund well known to Primewest. The mandate was established to acquire convenience, non-discretionary neighbourhood centres across Australia. This part of the business will be a big driver for us, and we're both seeking and working actively with capital partners on new mandates. Vital Harvest is a new opportunity for growth for Primewest Group. We acquired the management rights under our new brand, Primewest Agri-Chain Management, together with a co-investment in the ASX listed Vital Harvest Freehold REIT in June 2020. Vital Harvest is an externally managed agricultural REIT that owns an investment-grade portfolio of agricultural assets, including citrus and berries. The current portfolio is 100% occupied with a 6-year WALE supported by Australia's largest horticultural company, the Costa Group. We're very excited with this acquisition as we believe that agriculture is a huge growth sector. We're building our expertise and will continue to pursue this area as we are keen to grow, both in Vital Harvest and in our unlisted trust. If you'd like a more detailed overview of the trust, you can join the results call on Monday at 11:30 a.m. Sydney time. Details will be listed on the ASX on Monday morning.
Thank you, John. We will now hand over to Mr. David Creasy, Chief Financial Officer for Primewest Group, to talk you through the financial results in detail. A reminder that if you have any questions during this presentation, these can be typed into the Q&A section to be answered at the end of the session. David, please go ahead.
Thank you, Gail, and good morning, everyone, and thank you for joining us this morning. Before I review the financial results, I would like to briefly summarize the basis of presentation of our results on both a statutory and a pro forma basis. For further information, please refer to Note 3 of the statutory financial statements and Section 4 of our PDS dated issued 21st of October 2019. The financial statements present the result of the stapled group, which consists of Primewest Group Limited and its subsidiaries, which is the operating side of the business, and Primewest Property Fund, which is the co-investment side of the business. With respect to the statutory results, as outlined in Note 3, the Primewest Group of companies underwent a corporate restructuring on the 1st of October in advance of the IPO. As required by the accounting standards, for the purposes of the business combination, one of the existing companies, Primewest Funds Limited, was deemed to be the acquirer. Accordingly, the financial statements that have been lodged yesterday present as follows. For the comparative period, 30th of June 2019, the financial results are those of Primewest Funds only. For the current year, the financial results include the results of Primewest Funds for the period from the 1st of July to the 30th of September 2019, and the consolidated financial results of all entities in the group from October 1st of 2019 to 30th of June 2020. With respect to the pro forma results, as noted in Section 4 of the PDS, the pro forma adjustments include adjustments for 3 items. The first, both the corporate restructuring and the IPO occurring on the 1st of July 2019. This results in adjustments for the inclusion of results from the acquired entities for the period of 1st of July to the 30th of September, the first quarter of the financial year. The second adjustment, by moving the IPO to the 1st of July, there is adjustments for the inclusion of listed company costs for the pre-IPO period and the inclusion of investment income from the IPO proceeds for the pre-IPO period, which, as disclosed in the PDS, was limited to interest earned on cash balances. The final adjustment on a pro forma basis is the increase to the asset management fees that were made on 8th of November 2019, as outlined in the PDS, making those effective on the 1st of July 2019. Management's determined that using the pro forma presentation in light of the above will provide the audience and users of the financial statements and information the most meaningful interpretation of Primewest and its operations, both for the current year and going forward. And now to our results. Outlined on this slide is a summary of the pro forma earnings after tax for the year, split between the first and second halves of the year. For your reference, in the lodged version of the presentation, there are appendices including a reconciliation of statutory net profit after tax to pro forma earnings after tax, and also a reconciliation of the results to the PDS. As outlined earlier by John, we are pleased to report pro forma operating earnings after tax of 5.5 cents per security, which is in line with the PDS forecast. Revenues for the year reached $35.4 million, which was marginally short of forecast. The difference in revenues between the half-year periods is due to the recognition of the performance fee in May of this year. I will provide more detail on Primewest's revenue segmentation in the next slide. Corporate expenses for the year were $11.6 million, which exceeded the PDS forecast. To support our growth objectives and the new platform strategies that have been identified and earlier, we incurred additional costs in 3 areas. Additions to our team to support the growth in these platforms, and we're both in the wholesale mandate and the REIT space first with our corporate REIT and subsequently with the acquisition of the Vital Harvest management rights. The second area was the expansion of distribution networks through investment managers and financial planners as we continually look for new sources of equity in our unlisted fund space. And finally, in systems and technology, again, to support the growth, our continued growth as a company. While these costs were incremental to the PDS forecast, we are pleased with the impact of those investments in the post-IPO period, as John has previously outlined. Pro forma EBITDA for the year was $23.8 million, which was $1.6 million unfavorable to the PDS target due to the revenue shortfall and the expense growth as previously explained. Investment income for the year was $900,000, which was limited to the interest income on cash balances from the IPO. We have deployed approximately $35 million of IPO proceeds in the acquisition of Vital Harvest management rights and co-investment in Vital Harvest and the new retail mandate John spoke of. These investments were made late in the financial year and accordingly had a nominal impact on the investment income for FY20. The tax provision for the year is $5.6 million, which is significantly better than the PDS forecast. There are several reasons for this. The first being that the PDS forecast was prepared using a 30% corporate tax rate. However, the group remains below the small business threshold. The PDS forecast also did not take into account the tax treatment of listing costs, which there is tax deductibility on over time. There was an over-provision for taxes in 2019, which flowed into the current year, and also our lower than forecast EBITDA reduced the tax provision. However, in summary, operating earnings after tax of $19.2 million or 5.5 cents per security, again, was in line with the PDS forecast. I will now review in more detail our revenue segmentation. Asset management fees are earned by Primewest based on the valuation of assets under management. During the year, as described in the offer document, we increased fees on 43 unlisted funds by between 15 and 30 basis points, which was effective 8th of November 2019, but for a pro forma presentation is assumed effective to be 1st of July 2019. Asset management fees fell short of the PDS target for two primary reasons. The acquisitions, while we achieved our target, they occurred relatively later in the year as opposed to the PDS forecast. The second reason is that due to COVID-19, Primewest waived fees for the last quarter on a small number of funds with exposure to tourism and hospitality in their tenant base. Additionally, due to COVID-19, during the early stages of the pandemic, when rent collections in our unlisted funds were impacted, Primewest deferred a portion of the asset management fees on over half of its unlisted funds. Currently, the number of funds under deferral has been reduced to 8, and we look at this on a monthly basis. These deferred amounts are reported as accounts receivable and are expected to be collected in the first 6 months of FY21 as collections stabilize in the respective funds. Property services fees outperformed the PDS forecast and include revenue from 3 primary sources. Leasing fees are earned on new leases and renewals by our internal leasing team. Leasing fees outperformed expectations in both office leasing and tenant renewals, as during 2019, Primewest internalized all lease renewals, and FY20 was the first full year of fees from that decision. Development and project management fees are earned on development and capital projects on the assets we manage. Fees for the year were marginally short of expectations as project timing moved between financial years. The development team has a strong pipeline of projects, including our current project underway in Ellenbrook, WA. The third source of revenue under property services fees is in property finance, which is a new business segment for Primewest in 2020, resulting from the internalization of a previously outsourced service. Fees are earned on the establishment and renewal of debt facilities, and were in line with expectations based on both new debt placed for acquisitions and the renewal book. We'll now move to the balance sheet. As previously mentioned, our cash position remains strong and positions Primewest for growth. Financial instruments includes 4 investment positions taken by Primewest Property Fund, including the co-investments in Vital Harvest, the new Daily Needs retail mandate, a loan to 7 West Media Trust, and a strategic investment in Climb Investment Management. Other assets are represented by fees receivable from funds under management, and included in this balance is the performance fee due of $5.6 million plus tax, which is expected to be received in November from the underlying fund. Intangibles include amounts resulting from the business combination as disclosed in the financial statements. This includes management rights of $101 million, goodwill of $29 million, and other amounts representing deferred tax assets and right to use assets under the leasing standard. Liabilities are represented by normal trade accounts and provisions for taxes and employment obligations. Also included in liabilities is the lease liability under the leasing accounting standards adopted this year. As previously mentioned, the stapled group has no debt. That concludes my remarks, and I will now hand back to Gail.
Thank you, David. We will now hand over to Mr. David Schwartz, Managing Director for Primewest Group, to round off the presentation with Primewest Group's strategy and outlook. Thank you for the questions received so far, and a reminder to type them into the Q&A section if you have any, and we will address those at the end of the presentation. Over to you, David.
Thank you, Gail, and good morning, ladies and gentlemen. I'd like to start by sharing with you the Primewest Group strategy. Primewest has been set up to be capital light, and in so doing, we are highly leveraged to the property market. We are looking to grow assets under management within our corporate mandates and unlisted property trusts from which we'll drive recurring income. We have recently set up a new division which we call Primewest Bespoke. Primewest Bespoke will take on assets for high net worth families and corporates who have large property portfolios who want our professional service to manage their portfolios. We have recently secured a mandate which has a property portfolio of approximately $150 million, which we now have under management. We are now looking to roll out the service across the country. We are continuing to grow our existing platforms by launching new income and development funds and looking to secure additional United States opportunities. We will be seeking quality assets in the following sectors: education, agriculture, logistics, and offices, as we believe these sectors will give our investors exceptional growth opportunities in the coming years. Other growth opportunities we are continuing to explore include mergers and acquisitions of similar types of businesses. We have seen some sectors like the office and retail sector, which have been negatively impacted due to COVID-19. Primewest Group has a very limited retail exposure. This retail exposure is primarily in the neighborhood and convenience-based sectors. Our focus is on income certainty and capital preservation for our investors. We will continue to seek out opportunities for our investors as we have done in the past. There is a significant increased investor demand for agricultural exposure with long leases and quality tenants. This is an area where we see great opportunity, and we are positioning ourselves to get more involved in the sector through our listed REIT, Vital Harvest, and our unlisted funds. Primewest has a strong balance sheet with over $50 million in cash as of the 30th of June 2020, with no debt. We will be cautiously deploying this capital. The capital will be used for co-investment with our capital partners, supporting our REIT Vital Harvest, and soon to be renamed Primewest Agri Chain, and the acquisition of similar property management platforms. Over the years, we've built a supportive and expanded investor base of over 700 active investors and with good relationships with distribution networks. We have strong recurring revenues from long-dated syndicate fund life, with a weighted average fund life of the syndicates being over 6 years. We are currently in the process of taking on property management, and this should provide Primewest with a new revenue stream. A big growth driver for our business is partnering with large capital partners. Our capital transaction team are actively looking to expand our mandate business by building on existing relationships with our capital partners while continuing to look for new partners. I'd like to take this opportunity to thank our great team for the work and the effort that they have all put into to deliver this result during these difficult times. We are looking forward to a year of healthy, profitable growth ahead. I hand over to Gail.
Thank you, David. We will now look to answer questions that have been received during the presentation. The first question that we have will go to Dave Creasy. For the asset management fee of $18.9 million, does this include the $160,000 of waived management fee and the $640,000 of deferred fees?
Thank you, Gail. The $160,000 of waived fees is not included in the results, and the $640,000 of deferred fees is included in the results in revenue and amounts receivable on the balance sheet. And as noted, we expect that will come in, the cash will be received on that in the first half of the year.
Okay, and do you expect the cash at bank to be sufficient for growth in financial year 21, and whether you expect any change in the payout ratio?
The cash at bank will certainly be sufficient for the upcoming financial year. That, of course, depends on what corporate opportunities come our way, but at this stage, we expect that to be sufficient. And the payout ratio, we would expect to be in a range of between 80 and 95%.
Thank you, John. We have another question. Can you please add some commentary around the types of opportunities you're currently looking at? Are there any subsectors where you're seeing more opportunities emerging? And what would be reasonable FUM growth expectations for FY21? And I will pass that over to David Schwartz.
Thank you, Gail. We are looking at across all sectors, and we've always been opportunistic buyers. As I said in our presentation, the agricultural sector is a sector that we're looking to grow into. We're seeing plenty of opportunities in that side of things. We also have the existing mandates that John described earlier in the presentation on the daily needs or neighbourhood sector, and we are continuing to drive growth through our existing platforms where we've acquired logistics, industrial and logistics assets, and we're going to continue in that line with acquisitions. The other question was the expectation for performance fees in 21. And at this stage, we're not budgeting for any performance fees coming through. However, unless we sell or opportunities present themselves to sell any assets, but at this point in time, we don't have anything that we're looking at.
Thank you, David. We have another couple of questions. Do you forecast the commercial REIT IPO in 2021?
I'd answer that, Gail.
Mm-hmm.
We don't forecast that at this stage. The rationale for the commercial REIT was where listed REITs were trading in relation to net asset value of the underlying assets. That turned negative, and it means it's not supportable for us to list syndicates at this stage. In terms of the strategic investment in Climb, that was literally a strategic investment in a good capital partner for us. we don't have any other plans of a similar nature at this stage. And the third question there was in relation to growth opportunities from institutional investors. And we are, as we've mentioned, working actively in this area. Mandates is an important part of our business, and we want to grow both the number of capital partners and the areas that we would seek to invest into.
Thank you, John. And we have one final question with regards to the mandates, and that is, how sticky are the mandates? And David Schwartz, could you answer that one for us, please?
Yeah, thank you, Guy. The mandate business is a business that we've developed and continue to develop. It's a relationship business. They are sticky, and a lot of it relates back to performance. We can proudly say, as John mentioned in the presentation, that the performance on the assets that we've recently acquired has been excellent. And so long as you perform, they're very sticky, these mandates. Thank you.
Thank you, David. There are no further questions, so we will close the presentation here. Thank you, ladies and gentlemen, for your time today. If you do not have a group meeting or a one-on-one already scheduled and you would like to, please reach out to me to arrange that on 0452 553 407 or gailc@primewest.biz. Once again, thank you, and I will now end meeting for all.